Good afternoon. Welcome to Small Business Basics and Taxes presentation. I will be your presenter for today. My name is Klea Jokic, and currently I am associated with Training First Consulting. My expertise are in setup for small businesses, bookkeeping, payroll, and taxes. I have worked with many local businesses in manufacturing, construction, photography, direct sales, and consulting services. Past 15 years of my career include working in medium-sized companies and corporations as an implementation specialist of accounting and payroll solutions. I am also a vice chair of the Canadian Payroll Association for the Halifax branch. This webinar is a presentation intended to assist you with basic business startup tips, tax issues, and expenses. Information presented will help you in the process of starting or growing your business. The content of this webinar is to provide general information that is not intended to constitute as legal, accounting, or tax advice. Some aspects of the webinar are catered towards survey results. As a business owner, you are responsible for the actions of your business, and you need to stay informed so that you are compliant with the rules and regulations. Rules and regulations pertaining to taxes and startup information change frequently. It is important to understand that applying those will depend on your specific circumstances. We recommend you to engage a professional to implement best practices in the area of taxes, legal, and accounting. Small business owners have a diverse set of tasks and responsibilities for starting, managing, and growing a business. Some of those, if not all, include planning and strategy, finance and accounting, legal, marketing and sales, customer service, and human resources. On today's presentation, we are going to cover registering a business, talking about general information, business types and business number, income, defining income, talking about deductions and filing, an HST account, what you need to know, calculating and filing, and expenses, most common, meals and entertainment, motor vehicle, home office, supplies and office equipment, legal, accounting and professional fees, advertising, and professional development. For income tax purposes, CRA defines a business as an activity where there is a reasonable expectation of profit and there is evidence to support that intention. If you are self-employed, the CRA considers that you have a business. A business can be a profession, trade, calling, manufacturing, and undertaking of any kind. Most common business types are sole proprietor, partnership, and corporation. Based on the survey results, we are going to cover two most common, and that is sole proprietor and corporation. As a sole proprietor, you are fully responsible for all debts and obligations related to your business. There is unlimited liability, which means there is no separation between personal and business assets. Income is considered as income from self-employment and is taxed at a personal rate, which can be in a higher bracket. If the business loses money, it can be written off against other income of the proprietor. A corporation is a separate legal entity formed by applying either to the federal or provincial government. Shares are issued to owners or shareholders. Incorporated business has a limited liability, meaning the liability of the stakeholder is limited to the amount that they have invested in their shares of the corporation. There are many tax advantages to incorporating your business, such as tax deferral, ability to save through income splitting with family members, and the ability to claim capital gains exemptions on the sale of a business. Consultations and review of schedules and rates are recommended for this business structure to determine if this type and structure of a business is for you and your business. You will need a business number if you're required to open an HST account, have corporate income tax, have payroll and need to submit payroll deductions, are engaged in business with import and export, or something other of an activity such as to register a charity. Before you register, you need to know your business structure or type, business name, location, activity, fiscal year end, and how much your annual sales might be. CRA issues one number as a business number to simplify the way you do business with them. So for example, we have a business number 123456789 RT0001. The first 9 digits are a business number assigned to you by the CRA, and that is very unique to your business and identifies you as your business with the CRA. RT is a program identifier. In this case, it's for an HSD account. For example, if you were opening a payroll account, it would be RP. And the last 4 digits serve as a reference number. You can register for a business number by telephone, over the internet on the CRA site, or by mailing a form RC1. In the next segment, we're talking about income. Any activity that you do for profit is defined as income according to the CRA. CRA does not set any dollar values in its definition, so it doesn't matter as much or as little you have earned. You do not have to register a business, have a business name, take out a business license to be considered as operating as a sole proprietorship by doing business in your own name as an individual business owner as long as you are engaged in an activity for profit. So to summarize, self-employment for business income includes income from any activity you carry out for profit. Mandatory deductions are CPP and income tax. For reference purposes, all the rates and exemptions and contributions in the slides are referencing the year of 2014. One of the mandatory deductions is CPP, Canada Pension Plan. As self-employed, you will have to pay both the employee and employer portion of the CPP contributions. Each of those is at a rate of 4.95%. So your contribution rate is 9.9%. Annual basic exemption is $3,500 and maximum contribution $4,851. Starting at age 65, you can choose not to contribute to CPP, and as self-employed, you have to complete the application section of the CRA Schedule 8, CPP contributions on self-employment and other earnings, and file that with your income tax return. As self-employed business owner, structured as a sole proprietor, you will file your personal tax return on or before April 30th. Self-employed business income after deductions is considered to be your annual wages, which you will report as professional or business income. Federal and provincial tax rates for calculating income tax are based on tables defined by the CRA. All business income and expenses are claimed on T2125 form called Statement of Business or Professional Activities. Individual tax return T1 is due on or before April 30th. Self-employed tax return, including spouse if you and your spouse carried on a business, are due on or before June 15th. However, if you do have a balance owing, you still have to pay it on or before April 30th. EI, or unemployment insurance, you can register as self-employed for those benefits. Certain conditions will apply, and you will have to pay the maximum annual premium of $913.68. Again, this is for 2014. The premium rate is 1.88%, and to register for EI benefits, you need to access Service Canada site and register for EI special benefits for self-employed people. Once you register, you have to wait 12 months before making a claim for special benefits. If you change your mind, you have 60 days to terminate your registration as long as you have never claimed any benefits. The termination will be effective at the end of the calendar year, so you will still have to pay premiums for the calendar year. HST accounts. If you provide or plan to provide taxable goods and services, you can take a short questionnaire on the CRA website to see if you need to register for an HST account. If your worldwide HST sales are more than the small supplier limit of $30,000, you will need an HST account. Once you exceed the limit in one calendar quarter or in the last 4 consecutive calendar quarters, you are no longer considered a small supplier. In that case, you have 30 days after the day you made the sale that made you exceed that limit to apply for an account. You have to charge tax on sales that made you exceed the limit even if you're not registered for the account yet. You can register voluntarily if you want to claim input tax credits, and you may consider registering if you have clients or suppliers that only do business with HST-registered businesses. We're going to go through a few examples for an HST account and when you would have to apply for one. So let's assume that you started your business in January of 2014. In the first quarter, January to March, you made $2,000. April to June, you made $9,000. July to September, $11,000. In October to December, you made $4,000. In total, $26,000. Because you didn't exceed the $30,000 limit in the calendar quarters, you are considered a small supplier, and in that case, you do not need to register for an HST account. In our next example, we're going to assume that you started a business in April of 2013. So from April to June, you made $2,000, July to September, $12,000, October to December, $10,000, and then January to March of 2014, you made $8,000. In total, you made $32,000. You have exceeded the $30,000 limit in the last calendar quarter, and you are now, as end of April 2014, no longer a small supplier. You have to start collecting HST as of May of 2014, and you have 30 days after the day you first made a sale other than as a small business supplier to apply for an HST account. In our final example, we're going to again assume that you started your business in January. From January to March, you made $2,000. April to June, $12,000. July to September, you made $35,000. Immediately, you're no longer a small supplier as you exceeded the limit of $30,000 in one particular quarter. You have to charge sales tax on the sale that you exceeded the limit even if you're not registered, and you have 30 days after the day you made the sale that exceeded the limit to apply for a registration. Most registrants are required to file the HST return electronically. Once the account is open, the CRA will send a personalized return form at the end of your reporting period. You have to file your HST returns according to the schedule established by your reporting period, and that period is assigned by the CRA based on your business annual taxable goods. What you are reporting is the net tax, and you get that by subtracting the HST collected and the HST paid. So HST collected on sales minus HST input tax credit or HST paid equals the HST amount you will remit to the CRA. It's always a good practice to quote your HST number on your invoices. In this part, we're going to talk about expenses. According to survey results, the following expenses are most common expenses the businesses have, and those are identified as meals and entertainment, motor vehicle, home office, supplies and office equipment, legal, accounting, and professional fees, and professional development. Expenses are certain costs that are reasonable for a particular type of business, and they happen for the purpose of earning income. Only the business part of the expense can be deducted for tax purposes. All expenses do have criteria and formulas that need to be followed in order to be compliant, and all expenses need to be backed up by a receipt and or documentation. Meals and entertainment. The maximum amount you can claim is 50% of the amount you incur. This applies to the cost of meals when you travel or go to conferences. An example, business conference fee was $500 and the business conference will last 3 days. Meals and entertainment is provided, but no amount is specified for those services. So the rule stipulates that for each day food and entertainment is provided, $50 is deemed to be paid for those and is subject to the 50% limitation. Maximum deduction for all conference expenses would be $475. So how do we get to that amount? We're going to take the 3 days and apply the $50 rule for meals and entertainment. 3 days of $50 equals $150. Applying the 50% limitation brings us to a total of $75 for any meals or entertainment. So the conference fee itself is $350, which is the total $500 that we paid, minus the $150 total of food and entertainment. $350 for the conference fee, $75 that we can claim for meals and entertainment equals the amount of $475, which is, as we determined at the top, a maximum deduction for this conference expense. For motor vehicle expenses, you can deduct license and registration fees, fuel costs, insurance, maintenance and repairs, interest on money borrowed to buy a vehicle, and leasing costs. If you use the vehicle for business and personal use, you can only deduct the part of expenses that you pay to earn income. You can deduct the full amount of parking fees that are related to your business activities, and you can deduct the full amount of supplementary business insurance. To support amounts you are deducting, you need to keep a record of total kilometers you drive for business purposes. If you own or lease a passenger vehicle, there can be a limit on amounts you can deduct for capital cost allowance, interest, and leasing costs. You cannot deduct the full cost, and that applies to buildings, furniture, equipment, and vehicles. These are wear out or become obsolete after time, so you can deduct only their cost over a period of several years, and that deduction is called capital cost allowance. As a home expense, you can deduct expenses for the business use in your home if it is the principal place of business or you use the space to earn income. If you use your home for business and personal living, you will have to calculate the part you can deduct only for business use. Expenses you can deduct are maintenance costs, labor and materials for any minor repairs or maintenance, but you cannot deduct the value of your own labor. You can deduct operating costs such as heat, water, and power, property insurance, property tax, mortgage interest, and the amount you can deduct for business use of the home expense cannot be more than your net income, which means you cannot use these expenses to create business loss. For supplies, you can deduct the cost of items the business uses directly to provide goods or services. Office equipment that is leased, you can deduct a percentage of the lease cost that is reasonably related to earning your business income. For office equipment that you purchased, you cannot deduct the cost, only the capital cost allowance. You can deduct fees for external professional services such as legal, accounting, including consulting fees. You cannot deduct legal fees and other fees you incur to buy capital property or fees you pay to have an objection or appeal prepared against an assessment. You can deduct expenses including ads in Canadian newspaper, radio, and television as advertising expenses. Certain restrictions apply to the amount of the expense you can deduct for advertising in a periodical. You cannot deduct the expenses for advertising directed mainly at Canadian market if you use a foreign broadcaster for advertising. For personal development, training costs is not deductible if they are considered capital expenditures, and in nature the training results in a lasting benefit to the taxpayer. When the training is taken to maintain, update, or upgrade an already existing skill or qualification, the costs are not considered to be capital in nature. Any portion of a claim by a self-employed taxpayer in respect to training expenses is considered taking into account certain factors such as duration, location of the course, and days when training was not taken in order to determine whether any portion of the claim is personal or unreasonable. To review some factors that are taken in consideration, such as duration of course. Usually courses are scheduled for 2 to 3 weeks. Any expenses claimed for a period longer than that in certain circumstances may be considered unreasonable. Location of a course. As a rule, expenses of attending a training course outside of your geographical location is considered unreasonable to the extent that they exceed what you could have had for a similar course attending locally, if available. Days when training was not taken, that is covering claims that you cannot expense for the days when no training was taken. An exemption is made for days of arrival, departure, and weekend where the courses attended are on the last working day of the week. As an example, we'll take a course that is scheduled from Monday to Tuesday of the following week. Monday is the day you arrived. Tuesday and Wednesday you attended the course. Thursday, the organizers gave everybody a day off from the course for, let's say, some tourist activities or sightseeing and shopping. Friday, again, you attended the course. Saturday and Sunday is the day off. Monday of the following week, you attended the course, and Tuesday is your departure day. So the expenses that you can claim based on this schedule of a course scheduled from Monday to Tuesday the following week is Monday and Tuesday as you attended the course and you arrived. Wednesday, you attended the course, and then the following Monday and Tuesday, as Monday you attended the course and Tuesday was your departure day. This concludes our presentation. Thank you very much for going through the presentation with me. If you do have any questions, I would be more than happy to assist and answer any of your questions or concerns. You could email me at kleahfx@gmail.com and I'll be happy to assist. Thank you and have a great day.